Oil plunging today on a report that there will be no announced production cuts when OPEC meets next week. Jackie DeAngelis is at the NYSE with the story. Jackie.
Good evening, and thanks, Melissa. Well, crude oil taking a dive in today's session, down roughly 4%, after those reports that you mentioned that the Saudis said that there'll be no deal resulting from next week's informal meeting in Algeria. Now, analysts, traders, energy funds that I spoke to are not that surprised by the news, as this isn't really an official meeting, but crude prices have seen support from the what-if factor surrounding next week's conversation. More signs in the last few weeks that the cartel is very fragmented, but the Saudis usually have the most influence, and if they want to freeze or they don't want to freeze, it really is likely that OPEC will go with them. More commentary about prices dipping back into the 30s if there is no action, as well as supply will continue to outstrip demand, and the rebalance that the street has called for in the back half of the year will be much slower than anticipated. These meetings can usually create market volatility. This one is 3 days long with a decision, if any, expected on Wednesday. So that's what to watch for. Melissa, back to you.
All right. Jackie DeAngelis, thank you. So Chartmaster, there could be more pain ahead for oil?
Well, oil and energy stocks. I mean, basically, there have been people trying to play this for a long time. I think it's a value trap. It's trapped a lot of people. Yes, if you caught the absolute low in February, but let's look at the charts. It's sort of a hot mess all over the place. How would you draw the lines? I would say maybe this is a pretty good way to draw them. A series of lower highs, higher lows. You're working into an apex, a decision point. So I guess, right, this would be OPEC cuts, and this would probably be OPEC doesn't cut. But if there's wisdom in price, energy shares typically lead the commodity. And here is the S&P 500 energy sector, and it is already starting to break down out of that formation. So crude in the formation, you could say it's 50-50, but if there's any wisdom in the price of, oops, I've gone, there we go. So the presumption is that this is the message for crude, and ultimately I think energy stocks go lower. All right, a few more charts. Important, relative performance. It's one of the biggest and most efficacious factors in all quant models. The sector has managed to basically ascend its relative performance to the S&P has been poor. That's a tell. Okay, another tell, the leading edge. This is the whole sector, but the leading edge of energy is drillers. Baker Hughes, Weatherford, Halliburton, Schlumberger. The drillers, look how they act poor compared to the sector overall. That's where the future is. That's where people make 18-month decisions or 2-year decisions, drilling wells. That's another tell. So here's the XLE. This is the thing you can trade. I think it's starting to go break the line. I'm going to make the bet that we're going lower, lower, lower. I want to sell energy, and I want to do XLE as the vehicle.
All right, so Chartmaster says 3 lowers.
Yeah.
And the volatility really, I mean, you saw it today. There was that one headline that Jackie was talking about. We saw that intraday turn in WTI as well as Brent. Then we saw the intraday turn in energy stocks. It's almost like getting headlines from Fed members talking about raising rates.
Yeah, I mean, the energy stocks really have more actually to headwinds really than just the supply-demand imbalance. I mean, take a look at Exxon, which is the biggest constituent stock of XLE, and now you've got state attorneys general going after them for issues related to whether or not they were hiding issues related to climate change. Then you have them going after the value of their reserves. Then you have the SEC jumping in. Then you have the fact that they have massive negative cash flow trying to support a dividend, which could get cut. And if it does, people who are in the stocks for those dividends are likely to dump them as well. There's a lot of things that create a lot of headwinds here, and not a lot of things that could potentially support them. The Saudis aren't going to suddenly cut off production. They need the money.
So you agree with the Chartmaster basically in terms of the direction. How are you trading it?
December 67.59 put spread. You can spend $2 for that. You can buy the 67 puts for $2.70. You can sell the 59s against it for 70 cents. Very similar to the trade that Dan was talking about. And Nike trying to take advantage of the fact that out of the money puts in a lot of places, actually, the premiums are quite high in a lot of these spaces. We keep looking at the VIX. Things look complacent. Out of the money puts, actually, in a lot of places are not so cheap. So we like to sell those. This is a very good way, I think, to make a bearish bet.
Yeah, and December makes sense. Obviously, you know, the dollar's been very range-bound here. We know that there's a Fed meeting. We know that the probability is 50-50 that they're going to hike. It's probably a bit higher than that. That could obviously weigh on oil stocks a little bit. The only thing that's interesting about the XLE, when Carter brings up his charts about crude and everything, that uptrend that it's kind of sitting on that could break is kind of interesting. When I look at the XLE also, though, I look at, since May, it's really been very range-bound. It's gone sideways here. It gets a lot of really good support at its 200-day moving average, which is about $64 or whatever. And the only thing that I might consider is buying that same put put that Mike's doing, but not sell that way out of the money one, and maybe look to maybe own it outright, wait for the break, and then look to sell something after the fact, or maybe do a calendar or something, because I think the likelihood of the XLE being down near your short strike is very low. Can we agree on that?
No, that's actually a good point, because if there are headwinds and you're looking for an opportunity to spread, if there's little chance that something's going to go sharply higher and a decent chance that it could sit here or go lower, your opportunity to sell that put will probably present itself at some point between now and expiration.
When you take a look at the chart of the dollar, does it look
dollar's
capped to the upside?
Well, the dollar's pretty range bound too when we're talking about 18 months. Most currencies have. I'm biased to the long side on the dollar, which obviously wouldn't be good for crude in principle, but it could just be that the dollar is in a range and stays in a range, and that the crude and the energy potential move is idiosyncratic and specific to whether it's a cut or no cut, or whether the valuation and all the things that you said.
Yeah, I mean, part of the thesis on XLE, by the way, doesn't have to do, you don't require lower oil prices. We're talking about lower prices for energy stocks, and specifically for the biggest constituents of this particular group, which are the integrated.
You mentioned Exxon dividend cut. I mean, it never happened before, ever.
I mean, that would
did.
What would that mean?
That would be chaotic.
Yeah,
People are going to say, okay, this is what happens to us. I mean, I think that there are people who depend on that. This is one of the places that people have been able to get some yield, and those people are going to be pretty shaken up if that drops.